Most people think inflation is something that happens to an economy. Like bad weather, unpredictable, unavoidable. But inflation doesn't arrive by accident. It is built, quietly, over years. And by the time prices explode, the real damage has already been done. Right now, you're paying more for food, rent, fuel, electricity, not because things suddenly became more valuable, but because money became less honest. That's the part no one likes to say out loud. Inflation matters right now because it's not just about prices, it's about trust. Trust in money, trust in systems, trust in the idea that if you work, save, and plan, the future will roughly make sense. For most of modern history, inflation was rare and terrifying. Ancient Rome debased its coins to fund wars. Prices rose, confidence collapsed. The empire followed. So governments learned a lesson, or at least they thought they did. Fast forward to the 20th century. Paper money replaces gold, currencies float, and a new promise is made. We will manage money responsibly. That promise didn't last. Here's how the system actually works. At the center of everything is the central bank. It controls interest rates and money supply. In theory, it keeps inflation low and stable. In reality, it balances political pressure, debt, and economic fear. When economies slow down, central banks lower interest rates. Cheap money encourages borrowing. Borrowing fuels spending. Spending boosts growth. So far, so good. But there's a catch. Money created to solve emergencies rarely disappears afterward. After the 2008 financial crisis, trillions were injected into the system. Then came years of near-zero interest rates, cheap loans, asset booms, rising debt. And then came the pandemic. Governments shut down economies and printed money at a scale never seen before in peacetime. Stimulus checks, corporate bailouts, emergency lending programs. It worked. The collapse was avoided, but the bill was deferred. Inflation isn't caused by one thing. It's caused by